Welcome to Trade Pro. In this video, I test the classic MACD trading strategy 100 times in a row, but this time using a 1-to-4 risk-reward ratio. That way, we can compare the results of this to the other tests. I've done 1-to-1, I believe 1-to-2, 1-to-3, and I think that it's important for anyone with their strategy to be optimizing the risk-reward ratio and getting the most out of their strategy. So the whole point is to just kind of show the process in action of optimizing a strategy and making sure that you are putting in the effort to get the most gains out of these markets, as if you don't, you're probably not going to succeed in the long run. So let's get into this. I'm going to explain the strategy very quickly as I've already shown it on the other videos, and then I will get into the actual 100 tests and go over the results. Another thing is that in this video, I had decided to change the background color to kind of change things up, as a few people in the comments section said, hey, it's kind of hard to see things with the black background. The reason I was doing black was because it's easier on my eyes as I stare at the screen a lot, so that's why I have it set to black. But I'm going to try this out and see if you guys like it better. Just let me know in the comments if you like the white background better, if it's easier to see for you guys. And then I also actually got a new mic, so hopefully this mic sounds better. I don't really know how to set the mic up to make it sound really good. It's the classic Blue Yeti, and I've watched one video on choosing the best settings for it, but I haven't downloaded any programs to actually make it sound really good yet. So I'm going to have to work on that. But anyway, hopefully I can get this mic sounding much better than the snowball that I was using on the previous videos. I don't really know how this one sounds yet, as this is my first recording with it. And I'm not good at video making, editing, or microphone/audio stuff. So bear with me. I am learning this stuff still. The only thing I do know is a lot about trading. So that's about it. I'm not very good at many other things. So let's get into the actual strategy real quick, and then I'm gonna do the 100 tests for you guys. So MACD strategy, the classic. You guys can skip this if you already know the classic strategy, but 30-minute time frame, euro dollar is how I'm doing this test. And you have the 200 EMA, and that's just going to signal the trend direction. So you can only take long signals when price is above the 200 EMA. You can only take short signals when price is below the 200 EMA. And the actual signal is given by the MACD. So MACD settings, let me pull those up. We got 12, 26, 9, and then the indicator for the stop loss here. I have this set to the defaults 14 and 1.5, and I'll show you the actual stop loss indicator that I'm using for this test, trailing stop loss multiple of ATR Blue Phantom. So what you're doing to look for an actual entry signal is the MACD to come below the zero line of the histogram and crossed up for a buy signal, and price is above the 200 EMA at that time. Or for a short signal, you're looking for price to be trading under the 200 EMA, and then you're looking for the MACD to come up above the zero line of the histogram and cross down for a short signal. So you're going with the trend, using that 200 EMA as the kind of trend filter there, and then just looking for the crosses on the MACD that either happen below or above the zero line, depending on what direction of the trend is. So let's just show a couple examples of using the 1-to-4. So right here, there's the cross up that happens below the zero line of the histogram on the MACD, and it's on this candle. Price is above the 200 EMA, so we're good to go. Stop loss goes to the stop loss indicator, and targeting 4 times the risk for the profit target, which ends it right around here, and it's hit. And there's another one here, over here, right on this candle. And these are both really nice, beautiful examples, as I chose ones that work out really nicely. So there's that one, 4 times the risk there. And that's what I'm going to be testing 100 trades in a row to see what type of gains on the account we can assume are going to be consistent over a series of many more than 100 trades, hopefully. But anyway, let's get into the 100 tests and compare it to the others. All right, the results are in after the 100 back-tested trades using the 1 to 4 risk-reward ratio with the classic MACD trading strategy. I will be comparing these results to the other tests that used different risk-reward ratios but the same strategy in just a second. Hang in there. I'm going to quickly go over this individual test and then I'll pop it up on the spreadsheet and compare it to all the others. Okay, so using the 1 to 4 on the 30-minute time frame of Euro USD took 6 months of price data to find the 100 signals, and there were 28 winners, 72 losses. The most losses taken in a row was 11, and the most wins in a row was 4. Gain on the account, 40% over the series of trades, assuming you're risking 1% per trade and winning 4% per trade. So this means that if you were to have done 2% risk per trade, you would be looking at an 80% gain on account over this series of trades. Now, this did really well, and I think one of the best ones with the MACD strategy. So I'll pop it up on the spreadsheet here, and we can kind of compare the results of this risk-reward ratio to the others. You wouldn't think after seeing 11 losses in a row that the gain on the account would be any good, but that's just what you get when you use such a favorable risk-reward ratio. So I'm going to pop it up on the spreadsheet now, and let's compare. All right, so here's the comparison round on the spreadsheet with the 4 different risk-reward ratio tests, all done on the same strategy. And you can see that the 1 to 4 risk-reward ratio falls in the #1 spot with 40% gain on account. And I don't think that is really that much better than the other two up here. I'd say over a series of 1,000 or 2,000 trades, you're probably going to get right around the same with all 3 of these. The only one that really falls short is the 1 to 1, and that's no surprise as a 1 to 1 just isn't favorable. What I would be interested in testing now though is moving the stop to break even at a 1 to 1. Since the win rate on this is so much higher than the rest, you can move the stop to break even at 1 to 1, take a little profit off, then target 1 to 2 for the rest of your take profit. I think that will be an interesting test to do to see and kind of close out the classic MACD trading strategies, optimal risk-reward ratio. I think so far the conclusion is that it doesn't really matter what you do with 1 to 4, 1 to 1.5, 1 to 3. They're all getting pretty similar results at the end of the day. And I think the only thing left is what I just mentioned, the multi-step take profit. So I'm going to have that video coming out as well. I know people are probably going to be interested in that, and probably most people won't even hear me say this in the video because this is so deep into this video. So I'll probably put a pinned comment mentioning it as well. But anyway, interesting and fun test about optimizing your risk-reward ratio. Just make sure you're doing this stuff when you are putting together a trading strategy. It's important that you know for sure what is the best risk-reward ratio, what's the best way to choose your stop loss, what's the best indicator to be using, best time frame, best assets to be trading on, many different things that you need to optimize. So hopefully I can inspire people to actually do this and actually take the time out of their day to learn how to trade properly and create a good strategy that will be consistent for them in the long run. Okay, so anyway, thanks for watching. Hope you guys are enjoying and have a great day.